Starting a small business takes courage, but keeping that business alive requires financial discipline. Every year, thousands of profitable-looking businesses close their doors, not because customers disappear, but because cash runs out. Revenue alone cannot protect a company that spends too quickly, borrows carelessly, or ignores warning signs. The good news is that financial survival is not based on luck. It comes from building practical habits that keep your business stable during both good times and difficult ones. In this guide, you'll learn the financial principles that experienced business owners rely on to survive recessions, unexpected expenses, slower sales, and changing markets. These are not complicated accounting theories. They are practical decisions you can apply whether you operate a local service business, an online store, a restaurant, or a growing startup. Stay until the end because every lesson builds on the previous one, creating a complete financial survival system that helps protect your business long before problems become emergencies. Strong businesses are rarely built by avoiding challenges. They are built by preparing for them before they happen. The first rule of business survival is protecting cash flow above everything else. Many owners celebrate sales while ignoring when the money actually arrives. A company can report record revenue and still fail because customers pay too slowly or expenses must be paid immediately. Cash flow measures the movement of money into and out of your business, making it one of the most important financial indicators you will ever monitor. Every week, review how much cash is available, which invoices are overdue, what bills are approaching, and whether upcoming income will comfortably cover upcoming obligations. Never assume future sales will solve today's cash shortage. Businesses that survive difficult periods understand exactly how much cash they have available and how long it will last under current conditions. When you know your cash position, you make decisions based on facts instead of hope. That single habit reduces financial stress, prevents panic borrowing, and gives you time to solve problems before they become crises. The second survival rule is controlling expenses without damaging the customer experience. During periods of growth, many businesses quietly accumulate unnecessary software subscriptions, oversized office space, expensive equipment, and recurring costs that no longer create value. These expenses slowly reduce flexibility without attracting much attention. Schedule a complete expense review every month and ask one simple question about every cost. If this expense disappeared tomorrow, would customers notice a meaningful difference? If the answer is no, it deserves closer examination. Focus first on waste rather than essential investments. Cutting employee training, product quality, or customer service often creates bigger problems later. Instead, eliminate duplicate tools, negotiate with suppliers, reduce unused inventory, and simplify operations wherever possible. Financial survival is not about becoming cheap. It is about making every dollar work harder. Businesses with lean operations can survive slower sales much longer because their fixed costs remain under control, giving management more time and more options when conditions become challenging. The third survival rule is preparing for problems before they arrive. Every business will eventually face unexpected challenges. A major customer may delay payment, equipment could fail, sales might decline for several months, or economic conditions may suddenly change. Owners who wait until these situations happen usually have very few good options left. Build a business emergency fund that can cover several months of essential operating expenses. Even setting aside a small percentage of monthly profits creates protection over time. At the same time, develop simple contingency plans for your biggest financial risks. Identify which expenses can be delayed, which investments can be postponed, and which activities generate the fastest cash if conditions worsen. Preparation does not make you pessimistic, it makes you resilient. Businesses that plan ahead respond with confidence instead of panic because they already know their next steps. Financial survival depends less on predicting every problem and more on being ready to handle the problems that inevitably appear. The fourth survival rule is managing debt with discipline instead of emotion. Borrowing money is not automatically good or bad. The outcome depends entirely on how that money is used. Debt that helps purchase productive assets, expand profitable operations, or increase long-term earning capacity can strengthen a business when managed responsibly. Debt that covers ongoing operating losses or funds unnecessary spending usually creates even bigger financial pressure later. Before accepting any loan, calculate exactly how the borrowed money will generate additional cash flow and how long repayment will realistically take. Test your plan using conservative assumptions instead of optimistic projections. Ask yourself whether the business could still meet every payment if sales temporarily declined. If the answer is uncertain, reconsider the borrowing decision. Financially healthy companies treat debt as a strategic tool rather than a rescue plan. Careful borrowing protects flexibility, reduces unnecessary risk, and keeps the business in control even during uncertain economic conditions. The final survival rule is making financial reviews a permanent business habit. Successful owners do not wait until tax season to understand their numbers. They review financial performance consistently because every report tells a story about what is working and what needs attention. Schedule a monthly financial review covering revenue trends, gross profit, operating expenses, cash flow, accounts receivable, inventory levels, and upcoming financial commitments. Compare actual results against your expectations and investigate meaningful differences instead of ignoring them. Small problems discovered early are usually inexpensive to fix, while the same problems ignored for months often become expensive crises. Most business failures happen gradually, giving warning signs long before the final outcome. Owners simply overlook those signals. Financial survival is ultimately built on awareness, discipline, and consistent decision-making. When you understand your numbers, protect your cash, control your expenses, prepare for uncertainty, and borrow wisely, your business gains something more valuable than short-term profit. It gains the stability to survive difficult times and the confidence to grow when new opportunities appear. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.